Spain's economy is likely to contract less than 1.7% this year, according to Prime Minister Mariano Rajoy, which he took as a good news and a sign that the economy blighted by debt is on the mend. Joining me to discuss is Nick Stamenkovic, economist at Ria Capital Markets. Now, Nick, Mr Rajoy singled out an uptick in home sales in recent months as an example of improvements seen. He said that if the rise is sustained, it could have a significant positive effect on the future of the country's economy. Do you agree with this sentiment?
I think his statement's a little bit premature. The Spanish economy is being affected by two factors. One is deleveraging the private sector after the bubble in the housing market burst. House prices are still falling, even though they're down 25% from the peak. And I don't see any signs of that ending. So I'd be very surprised to see the recent rise in home sales being sustained. Secondly, we're seeing significant deleveraging in the public sector as the government attempts to reduce the budget deficit and stabilise debt to GDP ratio over the medium term. A combination of those two factors is going to mean the economy is going to recession this year and through most of next year as well. Consequently, I expect negative growth both in 2012 and 2013.
An ECB Governing Council member was quoted last week as saying Spain urgently needs to seek a bailout. What are the main reasons do you think that the country is so reluctant to apply for European aid?
I think it's largely political. You've got an election in Catalonia coming up in a couple of months, couple of weeks, and it clearly is causing some concerns to the Spanish government, the calls there for separatism, etc. But the broader issue is one where the government would see this as a humiliation and would be seen as sort of kowtowing to the likes of the IMF and EU. I think personally just playing for time. To be quite frank, yields have hardly moved over the last year. 10-year Spanish yields are still hovering below 6%. But they seem to be holding off as long as possible to delay the inevitable. But there's a lot of sovereign issues to come next year, and whilst they've mostly raised 2012 issues, there's still a heavy bout of sovereign supply to come next year. And I think at that time, the Spanish government will have no choice but to go for official assistance, because I don't think the markets will give them the benefit of the doubt for that long.
Some analysts have said while data may provide some comfort, it doesn't change the challenges that Spain faces ahead. What are the main obstacles on Spain's economic horizon, do you think?
Well, there's a lot of challenges. I think the two principal ones are the aftermath of the bubble burst in the housing market and the consequence that's going to have the rebalance of the economy away from consumer spending towards exports investment. One encouraging feature of the Spanish economy is we have seen a significant improvement in exports, which have risen quite sharply since the crisis. The problem is domestic demand has more than offset that, and that's pushed the economy into recession. The second one is the banking crisis. The banking restructure is now underway. It's a very slow and painful process, and obviously the banks have been very badly hurt by the property market. We're seeing consolidation in the cajas, and that will continue, and we've seen a bad bank be set up. So we are moving in the right direction, albeit slowly. And the third one is obviously the fiscal position, which is the one the markets are most concerned about in the medium term. Whilst the ECB has said it will act as a backstop near term and will provide support for the short end of the government bond curve once Spain acknowledges the need for a sovereign bailout, the longer end of the curve is still being undermined by worries about the medium-term fiscal trajectory. So consequently, the Spanish government has to take measures that, one, prevent the economy recession from deepening on one hand, and on the other, stabilising debt to GDP ratio over the medium term. And that's obviously a very fine balance. But at least the EU now has recognised that Spain will overshoot its budget deficit both this year and next year, but hasn't asked for further fiscal consolidation measures, recognising that they've already put significant labour structural reforms in place.
What is the likelihood of Spain meeting their 2013 targets? Are they going about it in the right way, in your opinion?
I think initially the problem was that they were following the path of Greece. They start off right in putting in fiscal consolidation in place by trying to cut government spending, trying to improve the long-term outlook for the economy, and also they raised the VAT hike as well. The problem is if you continue to impose fiscal consolidation in the economy in the short term, when the economy is already in recession, it leads to cyclical deterioration in the fiscal position, and that's the problem that Spain faces itself in. So maybe one of the criticisms would be that there should be more an attempt to sort out the fiscal position on the medium-term basis, and take action that prevents take account of the fact the economy is in recession, but also recognising that the debt-to-GDP ratio has to stabilise over the medium term. So it's a difficult balancing act for the Spanish government, but they have done some right things, like imposing structural reforms, particularly in the labour market, and obviously reforming the banking sector. But the problem is there's just a lack of growth, and until we see a pickup in growth, then it's difficult to see the budget deficits coming down as a percentage of GDP, and it'll be quite a few years before the debt-to-GDP ratio stabilises as well. But I don't think Spain is going to go the same way as Greece.
So, according to some, the country's economy is already showing small signs of improvement and should perform better next year than in 2012. But what is your outlook for Spain?
Well, there are some good policies being put in place. They're trying to make the labour market more flexible, which is obviously more painful in the near term. But ultimately, if it at least gives companies more flexibility, then that should help to reduce the unemployment rate over the medium term. Particularly, the banking reform is very important, and that's going to take many years. But there's a lot of banks which are essentially bankrupt or close to bankruptcy, and there's a period of consolidation. But again, a lot of pain will come through there before we see some benefits. And competitiveness has improved, as we've seen through increased exports, but that needs to continue. But for the next 2 to 3 years, the Spanish economy is going to suffer from a recessionary condition, stroke very low growth. It'll be some time before we get to any sort of reasonable growth of 1 or 2%, providing the government sticks to its guns both on fiscal consolidation and on structural reforms.
Nick, thank you so much for your insights today. Sadly, that's all we have time for, but don't forget to click back to Dukascopy for the very latest facts and figures affecting your trades. Bye for now.